Let's dive into the top 6 investment strategies to help you safeguard your money against rising inflation. Right now, there's more money in people's pockets than there are goods to buy, thanks to supply chain issues and the economic effects of the pandemic. This imbalance drives up prices, often way beyond the 7.5% inflation rate reported by the government. Just look at skyrocketing rents or property values, with some areas seeing increases as high as 15 to 20% for essentials like housing. So where should you focus your investment efforts? Here are 6 solid strategies. Invest in real estate. Real estate has long been a go-to during inflation because it's naturally aligned with price increases. As rents and property values go up, so does the potential income for real estate investors. If you can find a cash flow positive property, that is a property that still generates profit even after covering taxes, insurance, repairs, and other costs, you're in a strong position. Real estate markets have historically done well in inflationary cycles, and a property that pays you to own it is worth considering. Number 2, look for recession-proof stocks. Consider adding recession-resistant companies to your portfolio. Companies that people rely on regardless of the economy, like Walmart, Target, Apple, and Johnson & Johnson. People will still need groceries, household supplies, and basic services, so businesses that provide these essentials tend to hold strong. Telecoms like AT&T, utilities, and consumer goods companies such as Coca-Cola also tend to fare well, even during high inflation. These stocks are often a good balance of resilience and return. Next, diversify your portfolio. Instead of just investing in stocks, try the 30-30-30-10 approach. Divide your portfolio into 3 main parts: dividend-paying stocks, real estate or similar assets, and managed portfolios. Then put that last 10% into liquid or alternative investments. This strategy helps spread risk across different types of assets, reducing your exposure to any single market area. Next, Treasury inflation-protected securities. Tips. For a more hands-off, inflation-aligned investment, tips can be effective. These bonds adjust their principal based on inflation rates, which means their value keeps up with inflation even if yields are modest. It's not a huge return, but it's a safer bet than traditional savings, and it offers stability in uncertain times. 5, option trading. Option trading can generate extra income on stocks that may not see huge growth during inflation. By selling options on steady, resilient stocks like Walmart or AT&T, you can bring in additional income, typically between 6 to 12% annually, without needing to make new stock purchases. However, this strategy requires understanding the risks involved, as option trading can also lead to losses if not carefully managed. It's an advanced but effective approach to help balance a portfolio, especially during inflationary periods. Number 6, a high-yield savings account. A high-yield savings account is a smart addition for those looking to keep part of their portfolio liquid and accessible while earning better than average interest. Unlike many investments, a high-yield savings account allows you to access funds quickly in case of emergency or sudden opportunity, without the volatility of the stock market. These accounts have higher returns than traditional savings, and during inflationary times, banks often raise rates to attract deposits. While they won't beat inflation over the long term, high-yield savings accounts offer a safe, reliable place to keep cash on hand. These 6 strategies offer a range of options to consider. The key during inflation is to think long-term, avoid panic selling, and keep an eye on opportunities. Invest in solid, inflation-resistant assets can help you weather these cycles with confidence. If you liked this video, watch my video on how to set up your payday routine. I'll link it here. In this video, I'll share with you the 5 essential steps you should take when you receive your paycheck so that you can set yourself up for financial success.